Francisco, great to see you again. Kyle Bass this morning told us he thought this would end up raising prices and harming consumers in the long run. What's your take?
Hey, Kelly, I can't disagree with that. Certainly, when you tax excess profits that companies are making at times like this, you're going to force a reduction in investment, which is the only thing that's going to take us out of this hole and get us into a better position in the medium term. Remember that we have a huge supply shortfall building up. Inventories are at very, very low levels. If you adjust for consumption, we have the lowest stock-to-use ratios we've had in decades, meaning that we don't really have any buffer to accommodate the next energy supply shock. So I don't know. I mean, I think the UK government is doing that just to appease consumers, which are obviously getting a hit very hard. So in that sense, I understand the policy move, but also I think it's very important that we focus on making the right investments so that we prevent further price spikes over the course of the next 2, 3, 4 years.
The rule is supposed to have an incentive, Francisco, for investment. So it's supposed to, on the one hand, tax profits, while on the other hand, making sure it doesn't discourage investment. Do you think they can put the needle through that thread? You know what I'm trying to say?
No, I know what you're trying to say, and they've been talking about potentially allowing for faster depreciation of investments. So there's still, I think, it's still up for debate what they're going to do exactly with that tax windfall. Whether there's some of it's actually going to be pushed back to the companies in the form of accelerated write-downs. But I do think at the end of the day, we need to take a more serious look at what we are doing on the supply side. And remember, this is just before Europe goes into yet another debate on how to crack down on Russian energy exports. And remember, Russian supply is down 1 million barrels a day. Oil demand was supposed to grow 3.3 million barrels a day this year. It's only growing by about 2 million or so, or maybe a bit less even, because prices have risen so much. So we've already lost a good chunk of our demand recovery, of oil demand recovery, energy demand recovery. Essentially, that means that we're losing our GDP recovery as well. So we are very concerned about that because, again, we could be hitting a wall here from a demand standpoint. We may not be able to keep growing our economy if we don't get that supply.
Well, you talked a moment ago about the need to focus on the supply side of the equation. What does that imply? What do you mean there? Spell it out.
Well, I mean, I think we need to rethink how long the energy transition is going to take, right? And certainly try to take steps that are reasonable within our ability to get to the net zero targets for 2050, but at the same time, making sure that we have enough hydrocarbons for the here and now. Otherwise, we could end up having a very disruptive transition in the next 6, 12, 18 months, and essentially, I mean, I'm talking about the potential for supply rationing. I'm talking about the potential for forcing, I think, consumers to take a bigger hit. Remember that for the time being, we are taking all the wrong policy steps. We are subsidizing consumption at the pump in many places around the world, including the U.S., including Europe, by cutting back taxes, and that's doing nothing to adjust the demand levels to a limited available supplies. So I think we need to first correct the policy errors on the demand side, and then we need to, essentially, as I mentioned, address some of the supply issues, maybe incorporate or entice companies to invest faster here and help us bridge this gap, this huge gap called Russia that we have ahead of us here.
That's very interesting what you just said. I mean, that through policy, for example, by cutting state tax on per gallon tax, you're actually encouraging consumption. And you said in your answer there that we may be looking at supply restrictions. What do you mean by that? In other words, that I would only be allowed to buy a certain number of gallons per week, or what?
Well, maybe not that dramatic, but I do think. Yeah. No, I see what you're saying. Maybe not dramatic. I'm thinking actually lower speed limits would be good for starters, right?
Interesting.
Rather than giving subsidies, I think we may want to ask people to drive a little slower. The U.S. may not have to do this, but I think Europe actually is getting closer to the point where you're going to have to do this. I think gasoline supplies are just getting very, very tight. Diesel supplies are getting very, very tight. And while the U.S. can actually handle, remember, the U.S. is a net energy exporter at the end of the day, but Europe is a huge energy importer. So I do wonder 6 months from now whether we'll be talking about potentially speed limit restrictions in some parts of Europe.
Which is what we had in the 70s, as I recall. I mean, I remember waiting in gas lines in 73, 74 as a result of the war in the Middle East. But there were they cut the speed limits down from 70, 75 to 55 nationally. And, it was a pain, and now they've all gone back up. Very interesting discussion, Francisco. Our weekly, well, it's usually Tuesdays, but today, Thursday, with Francisco Blanch. We thank you, sir.
Thank you.
Good to be with you, man.